Welcome to Classic Value Investors. My name is Mariusz Skonieczny, and today I'm speaking with David Morgan, who is the founder of silverinvestor.com, and he's also the editor of the Morgan Report. David, welcome.
Thank you.
David, thank you very much for agreeing to do this interview. I wanted to chat with you because you are an expert in silver. You also did some interviews talking about gold but I specifically wanted to talk to you about silver because, as you know, over the last couple of years, silver has gone down quite significantly, and I just wanted to get your thoughts on what you think about the metal at the current prices and where you see it possibly over the next couple of years.
Okay. Well, first of all, as you said, just to backtrack and go over a little bit what you said, it's been a rather tough couple of years for precious metals investors, gold and silver both. And right now, where are we? Which was your question, is we are basically under the cost of production in most cases. So at the $20 level or near the $20 level or sub $20 level, this is a cost or a price rather that is lower than excuse me, it's lower than the actual total cost of most primary silver mines. So for example, if you take a primary silver producer, and a primary silver producer is a company that produces silver as their primary product, so they might produce copper and silver or gold and silver or a few metals, but their primary bottom line asset, in other words, the metal that brings the most to the bottom line, is silver. And there are very few of those. There are not very many primary silver mines in the entire world. Now, there is a great deal of silver mining that takes place in the base metal miners. Uh, the big conglomerates such as RTZ and Rio Tinto, for examples, are ones that produce a great deal of silver, although it's not their primary metal. Their primary metal mining is base metals, and about 70% of the entire silver supply is a result of base metal minings. And these people, these miners, for the most part, really don't care much about the price of silver because to them, they're much more concerned with their primary metal, be it copper or lead, zinc, what have you, than silver. So silver to them is a byproduct, and they treat it as such, meaning that they turn their hedge book over to the bullion banks, and they're able to play these paper games in the market backed by some amount of physical that comes out of the ground from these base metal miners. And of course, they lever it up, they leverage it quite significantly. And so this is one of the problems with the silver market is that the majority of the silver mined, roughly 70%, is produced by people that really could care less what the price does, and they're very willing to put together a situation where the bullion banks basically have control of not only the physical, but they also have control of the paper machinations that take place. So that is a detriment to the silver market from a price perspective, but it goes both ways. I mean, I want to be absolutely fair and objective as I can, and that's difficult for me being an honest money advocate and also a student of the precious metals. But nonetheless, you know, when the silver market did go from the breakout at 19 and all the way up to 48 in 2011, there weren't many people talking manipulation then. And I'm not saying that there was. What I am saying is that most of the small, medium, and even large investors that are very bullish silver and committed to the philosophy of silver investing and gold investing, they are biased, and myself, I'm biased. But it took the CME, I think, 4 or 5 increases in margin requirements before the market cooled off. And once the market did, it suddenly shot down. And that was not unexpected by me, not only the margin increases, but the fact that once it sold off, it would come down rather sharply. There was a lot of enthusiasm and momentum chasers that were taking place, and I was getting concerned that the market was rising too rapidly, and it did. And so, with that kind of a move up, it usually takes a couple of years to consolidate. It's been almost 3. If we get into June 30th, 2014, it would be 3 years. But right now, I think it's an excellent time No one wants it. No one cares about it. No one talks about it. Everyone overlooks it. People that have bought higher that don't like it anymore have sold for a loss. Those that have bought higher that are holding are just not really much interested in buying more. And of course, then you've got the very disciplined silver stackers that buy for the long term, and they buy every week or every month or every other month or every 6 months, however they're structured. So it's across the table. But as far as someone that's on the sidelines that really doesn't hasn't jumped into this market, now would be an excellent time. I think that anytime you can buy any commodity under the cost of production, and you have some patience, you're going to do well.
But let me just jump in here for a second. So we have a metal that is being produced and the price is under the cost of production. And logically, you would think that it just cannot sustain itself for a long time, and uh, some of the mines are going to start shutting down. But then at the same time, you said that 70% of the people of the production, they do not care where the price is. So why couldn't silver go to $5, $2, $8? What's your response to that?
Right. Well, you did a good summation, and that's correct. So a primary silver miner that's producing at $25 the ounce, and it remains at 20. Eventually, they're going to have to make a decision to cut back their mining, close down, curtail operations, or whatever. But 70% of the market, as we talked about, doesn't really care because as long as the copper price is making them money, or zinc, or lead, or whatever it is, the silver price really doesn't have much effect on them. So they'll keep producing. So why can't it go down? One, it could. Uh, will it go to those levels? I doubt it. The reason being is looking at the data that I look at and knowing markets the way I know them, and certainly markets have humbled me many times, and they certainly could again. But knowing, one, the fact that silver had a key reversal on the 28th of June, it went to 1817 and came up substantially to close at over 20 that day. What that indicates in the marketplace is that when silver got to that level, that low 18 level, there was, I'll call it almost a panic to cover their short positions by buying activity. And this is known in the electronic world and the pits themselves, which the actual open outcry methodology of trading commodities in general has been reduced substantially from what it was some time ago, say a decade or two ago, but nonetheless they exist. And what it means is that for the price to get down below that again, it'll have to be pushed pretty hard. Not that it couldn't, but there are people that understand this market and they will know that one, regardless of the base metal production, that silver is a screaming buy anytime it's under $20. So there's probably open orders out there for $19 silver, $18 silver, $17 silver, whatever. These orders are just sitting under the market right now for physical metal. And there's also a lot of off over the counter market activity that takes place that is already designed with a price structure that's probably at these levels or higher. So there's a lot of you might say cushion in the market that I would say makes it nearly impossible for you to see like $10 silver again, or probably even 15. Could it? Yeah, I would use the word could. Yeah, I just don't see it. There's too many market forces in the transparent market and the non-transparent market. And the fact that one, silver showed such strength when it did the key reversal, and we've seen it above that level for almost 6 months now, shows from the way I've studied markets that the probability, not it's not a perfect world, but in the probability it's very high that you're not going to see silver much below that level. In fact, I've called that the bottom for this consolidation period from the high of 48. So I think as low as it's going to get has already been achieved. Could I be wrong? Yeah, I could be, but we'll see.
And you recently made a call for both gold and silver in 2014. So let's stick with silver a little bit longer. So what is your call for 2014, and why do you think it would reach that level?
Well, my call is to go to like the 30 to 34 level. And I base that on more on technical work. And of course, the fundamentals play in heavily as well. But one, it presupposes I'm correct. So already I've got something that, is questionable, but again, I believe I am correct. So we've seen the bottom reached if you buy that presupposition that the bottom was in. So from all of July to the end of the year, we've based, and we're about ready to come back up, in my view, technically and fundamentally. So, how high is it going to come up in 2014 is the question I asked myself. And the answer is I think it can recover all of the paper losses that it experienced in 2013. So, if you look at a chart of silver, you'll see that it opened the year of January 2013 at about $32. And here we're closing the year out around 20. And so there's no reason in the world that it couldn't, come back up to that level during the course of a year's time frame. On top of that, the debt situation, the main driver in the precious metals isn't the industrial use, it's investment demand. And that driver is very difficult to predict because we really couldn't predict when silver broke out of the $19 level. It went to actually 26, and I was ready to take my short-term trade off. I do both trading and investing. I keep my core position, but I also trade. And I caught the breakout at 19, went to 26, actually got out of the trade. But I let the market dictate how to trade, not what I think the market could do, should do, or what. So I realized the market was consolidating around 26, and I put a buy order in if the market proved it could go up through a certain level. And lo and behold, it did, and that was the announcement of QE2. And QE2 took it uh, from the $26 level all the way up to 48. So that would be very difficult to predict ahead of time. Not that silver wasn't capable of making that price level. In fact, I think it can make a far higher price level. So whenever I make these 1 year calls or whatever, it's very difficult. The reason you would subscribe to the Morgan Report at the Basic Plus service is that I do the technical work and the videos for the benefit of a more accurate call, or at least accurate trade, or uh, price signals that the market is giving us. So it's not a wild guess, but it's somewhat that. The reason, again, and I got off track slightly, is that the fundamental fact remains that there's so many financial problems out there in the real world in almost any nation state you care to name that something could happen that would ignite these markets overnight. And that can't be forecast as far as time is concerned. So something could take place in a matter of just a few weeks, and all of a sudden the metals are off to the races, not to look back again. I don't, no one can see that ahead of time, but certainly that has to be considered in your thinking if you're going to take a position in the precious metals.
If you are right about silver reaching 30 or $34 in the next 12 or even 24 months, considering that the primary silver mining producers right now are barely making money, uh, the outperformance in the silver mining, pure silver mining producers could be extraordinary if you're right on your projection of silver, don't you think?
Yes. Yeah, they're leveraged both directions. They're leveraged to the downside and to the upside. So you're correct. You get a move in silver of, what I consider to be fairly modest. I mean, let's look at the facts. The fact is silver went from 32 to 20 over a year's time. So certainly it could go from 20 to 32 over another year's time. And you could see, great gains in the mining equities that remain. Some of them have gone out of business, as you know. So uh, the bottom line to those companies would be substantial, and of course, the price of the stock would be reflective of that.
Right. Now, you're considered a silver guru. Can we chat for a few minutes, maybe about gold, if you
Yeah,
have any
certainly,
comments?
certainly, and I'll comment on the silver guru, and I very seldom say this on an interview, but I really use that as kind of a tongue in cheek. I mean, I do it just as a way to find me on the internet and use it as an email address. I consider myself to be a student of the silver market like anyone else. Certainly, I don't know everything about the silver market. No one does, no one can. I'm always learning more. And I really don't consider myself to have guru status. So I just want to get that out there for the listening audience because I take it kind of as a humorous thing, but certainly I answer to that and but there's really, I try to keep my ego in check because believe me, as I've said earlier in the interview, the markets have humbled me many times. And, the older I get, the more conservative I've been. I mean, when silver did hit the $48 level, I did take off my trading position. I told all my members that. Many of them were very grateful. Some were so over leveraged that had they not gotten out, they might have gotten in big trouble. And I also try to protect the positions that we have. And my mistake about, putting on a hedge at that level was to not keep it on long enough. I should have, kept rolling over, continue to buy puts or whatever, simple strategy for a long, long time, and I didn't. I'm, biased to the bullish side, but nonetheless, the markets go both directions. As far as I'm concerned, the secular bull market and silver is far from over. And yes, let's go ahead and talk about the gold market for a while.
So the kind of work that you did on the silver side, you looked at uh, pure silver producers and you figured out the costs and you determined that it's above $20, and because of that, silver is trading below the cost of production. How, did you do this kind of work, or are you aware of this kind of work on the gold side?
Yes, yes, we took a look at gold as well, and it varies mine to mine, company to company. And so, but you can take, the large producers and do, five of them or so, and you get a pretty good idea of what the real costs are, the true cost, not the cash cost, the all-in costs. And for gold, you're looking somewhere between 1,200 to 1,400. So gold too at the $1,200 level represents, basis the same logic, a good value for a value investor if they're able to buy it, hold it, and not leverage it, and just wait, have some patience.
Now, gold is a little different than silver because a lot of the silver production is used in the industrial. Uh, but how about silver? Most of it is not used. Am I correct?
Yeah, and gold is primarily just used as money. I mean, certainly jewelry is substantial, as we all know. I mean, there's wedding rings, millions of them, and most of them are gold based. But no, it's primarily money, and it's very little, very small use in industry. So gold has a unique property. It doesn't tarnish. It's valued. It's rare, and it's been voted by the public through a very long time frame to be valued as money.
I,
It's that simple, really.
I find it very interesting that just like silver, gold took a beating over the last 2 years. From September of 2011, it declined from what it was 1900, and now uh, a few days ago we were below 1200. And what I find interesting about this is that when we were at, let's say, 17 or 1600, no one even considered the possibility of gold being where it is right now. But now that the trend has been down and this is where we are, all I'm hearing is gold is going to 1,800. I don't hear very many people talk about gold being at 1,400 or 1,500, which is a very logical thing to assume, because if it's not there, the entire industry will have huge problems. What's your thoughts on this?
Yeah, I agree with you. I mean, as we discussed on the silver side, I mean, if you're under the cost of production for very long, then you're going to have changes in the mining of the metal, and so that applies to gold as well as it applies to silver. And that would mean, and there's not much byproduct gold mining. I mean, there is some. There's some copper rich situations that produce some gold as a byproduct and that type of thing, but it's not significant like it is in the silver world. So I agree that you can't have these depressed prices for a substantially long period of time without adjustments to the market. And the market adjustment not is not necessarily the price coming up for it's that the mining would be curtailed. Eventually, the price will come up. I mean, you can look back at the bear market in the metals and see how long silver was at the $5 level or thereabouts, and gold was actually under 300 for some time. But there wasn't much activity going on in the mining industry at those levels, and it would happen again. My take is simple that the secular bull market in these metals is intact, and it's intact for two reasons. One, on a technical level, most of these bull market runs last 17 years. and we're only in about 13. So could it be over? Yeah, it could, but I don't see it chart wise. It doesn't show it over. But more important than that to me is the fundamentals. And the fundamental is the reason you want gold and silver is that the financial system is in such disarray that there are problems that are going to be that are unresolved and will continue to be unresolved. And the only way for these problems to be resolved is for the market itself to take control, not politicians, not bankers. And of course, you could have that argument all day long, and I'm sure some of the powers that be would argue with me that they have a handle on it, they have control. But their only methods are to print more money and for the politicians to spend more money. And this isn't working. Clearly, it's not working. And so, as more people wake up to that very simple fact, they'll start to seek out the one truth. And the one truth is in these type of situations, if you have excess capital, you have excess savings, meaning that you've got your shelter, your food, and your water, then anything left over from that, you really want to be outside the system. And the only thing outside the system that makes sense over time or over history is gold and silver. So when that starts to become a consciousness raising situation on a global basis, and you could see the 1% of the population that invests in gold and silver now move to 2%, which is only meaning 98% of the people still have their head in the sand or think that the powers that be know what they're doing or just don't know what's happening or don't care. Those people could be left on the sidelines while that 1% moves to 2%, a doubling of activity in the physical market. And that could take these prices to levels in paper that are astronomical. I think you're going to see this bull market go into the history books. I think you're going to get in situations at times where you're not really going to be able to get a great deal of physical metal. And it isn't meaning that the local, small investor can't go down to the local coin shop and buy 10 coins, 100 coins, a couple hundred ounces or something like that. But I think you'll get to a level where a hedge fund that wants pure physical, that wants to buy in the millions or billions, is going to be unable to buy it. And on the silver side, since it is an industrial commodity as well as a monetary metal, it has both functions. Once you see that the monetary demand for silver starts to increase substantially, people that need the metal for industry, such as like an Apple computer, for example, that have these huge balance sheets of cash and really don't know where to put them, might come into the market and buy the physical metal so they don't shut down their supply chain. So in other words, they warehouse it for future production. And once that starts, then you could have like a double feeding frenzy. You've got a frenzy going on the investment side, and you have a frenzy going on the industrial side, both taking place at the same time for a very limited market. So there's lots of reasons to remain bullish, although now doing it, near the end of the year when things have been so discouraging for so long, it's hard to keep optimistic and objective. But those are the facts. We have a great deal of movement to the upside. I'm just concerned that it could go on longer than I expected, longer than my work shows. Another year of this basing, which I doubt will take place, but no one knows. The market knows more than any of us. I doubt it. I think the worst is behind us. But again, next year is next year. We're going to have to wait and see.
From if you take economics 101, you learn that for the price of something, there's supply and demand. If the supply goes up, and the demand stays the same, the price would go down. And if demand goes up and the supply stays the same, the other side happens. Now, what I find interesting specifically about gold is that the price is going down, and you would think that, well, demand has to be going down. But yet, when you look at the physical side of gold, the demand is absolutely unbelievably high. Yet we get these these huge declines. Can you just quickly comment on that?
Yeah, there's a system that's been designed to keep that mechanism working. And so you fill in that gap with paper gold. What you do is you sell a piece of paper that says it's equivalent to gold when it really isn't. And in most cases, the people that accept that as quote unquote gold don't really care because they care about the paper paradigm. And as long as gold moves whatever direction they're betting on, then they can make money, quote unquote money, currency really, on that bet. And so the gap between the real and the non-real, the fiction or the imaginary, is created. It's a man-made creation. It's the futures market. It's the options market. It's the derivatives market as a whole. And so those are unlimited. I could write a fictional piece of paper and claim off, 4 billion ounces of gold to you. And if you're willing to accept it, it exists as an imaginary thing. And the only reason, the way that this is going to break is that when some of that imaginary situation cannot be made good on, in other words, it can be made good on the paper situation, but not in the physical. So let me state it more accurately. When there is a physical demand, known to be a physical demand that cannot be met, that's when a lot of this paper stuff will be rethought, and it could be rethought very very accurately very quickly, because there could be a great deal, and there are a great deal of people, entities, hedge funds, managed money, pension funds, etc., that have something in their file cabinet that has a piece of paper and a claim of so many ounces of gold, silver, or both, and yet maybe they're not really valid. And so some of that, you know isn't valid. And what will take place is the basically it's like calling in a card game. Okay, I'm calling your hand. Show me what you've got. And when they call and ask for the physical that they have a claim to, and it's not there, then you're going to see things really, really come apart. It's going to be unfortunate. There's going to be a lot of unfortunate I should say anecdotal, there'll be a lot of unfortunate real situations that are going to be very noteworthy. That's why you see, for example, the Sprott Physical Trust trade at a premium in a bull market, because people know the physical is there. Whereas some of these other ETFs, most people know that they're just basically a claim on the price movement, not necessarily the asset itself.
Right. Okay, David, thank you very much for chatting with me today. Uh, if people are interested in going to silverinvestor.com or checking out the Morgan report, how can they do this? And also, can you talk a little bit about why would people benefit from going to Silver Investor or reading the Morgan report?
Certainly. Well, if you want just free information and catch all the interviews like this that I do, we try to catalog them all on my YouTube channel, which is Silver Guru. That's YouTube, Silver Guru. I put out a lot of stuff on Twitter, and that's at Silver Guru 22. But if you really want to get more knowledge, go to silver-investor.com and sign up for our free letter that comes out every Saturday. And that's an economic update. It usually has some of the interviews and questions from readers. And then those that are serious can use a drop-down menu on the right-hand side. And those are paid memberships um, to the membership side of the website only. And that has 3 different levels of service. And that's where we go not only into the metals, the economy, but mining and mining situations. And of course, we also take at a certain level, once you're at the basic plus level, you're actually allowed to send me an email with a question on it if you wish. And you'll get a response, not necessarily from me, but you will get a response either from me or one of the staff. And oftentimes, depending on the merit of the question, we also can put that in the Morgan report. So if you're interested in the membership side, just go ahead and visit the website, use the pull down window and read. And we also have a 30-day money back guarantee. In other words, if you subscribe, you pay us your money and it's not for you, you have 30 days to figure that out. And of course, that's not an issue for us if you don't like it. And it's not for everybody. We fully understand.
All right. Well, thank you so much, David, for doing this interview. Have a good rest of the weekend.
Thank you so much.